in which after issuing the exposure draft, we invite our members, our fellows, regulators, Islamic financial institutions, and experts around the globe to provide their comments on the respective exposure draft of the standard. And we conduct multiple public hearings. As a rule, at least one public hearing is there, but as a practice, normally between 2 to 10 public hearings, depending on the nature of a standard and depending on more relevant countries we conduct. Technology has changed the things, and because of this COVID-19 pandemic, lot of issues are emerging in a new way, and traveling and lot of activities that were earlier considered possible, holding big seminars and public hearings physically, is not considered feasible, including particularly the traveling part, which is very difficult. So we have decided to conduct the public hearings for the upcoming standards for now through webinar. But even before that, when we were conducting public hearings physically, we had conducted multiple public hearings along with the webinar option, and some of you might have already attended some of those public hearings. So I just want to emphasize on this important aspect that your input, your contribution to this process is very important. It's very crucial. Whatever comments you provide will be generally of two types. Number one, some of them might have already been discussed by the board or the working group at different levels, and which may need some explanation or clarification. So I can provide you that explanation or clarification. The other comments would be suggestions for improvement or identification of any error or implementation issue, etc. So those are more relevant for the upcoming part, that we will perform a review based on those comments and we'll take it forward. Whatever comments you provide today or whatever comments you provide in writing, they are all taken to the working group. We do not ignore the comments. Even if I provide you a clarification that this was the board's view, it does not mean that we are going to neglect your view. We are going to take it again to the board or the working group, as the case may be, and they will reconsider their view based on the comments provided. So this is the very crucial. It's a very crucial part of our standard setting process, and we highly appreciate your presence here. And please feel free to be to take active participation in the session. You can put your comments in the chat box as well, and we can allow you to ask the questions online as well, if the system allows. Sister Farida, will the system allow to ask the questions online?
The chat is open. I'll have to check on the audio for each person, and then
yeah. Okay, so I'll prefer that if there are comments, we'll take those comments in the open session. But for sure, whatever comments we receive in writing, we'll take them forward. So with that, we will go to the main topic for today. The standard of Zakah, financial accounting standard on Zakah, is a very crucial standard for AAOIFI's from AAOIFI's perspective. When we talk about AAOIFI's objectives, it's not only about serving the Islamic financial institutions industry. It's about an overall Islamic economic system, which includes Islamic finance industry as a main component, as a very important component. But we work beyond that. Not only this, rather from the perspective of Islamic accounting, which is the fundamental for the foundation and establishment of AAOIFI, that we need to develop accounting standards and accounting practices in a manner that enable the users of financial statements to understand the things properly and to be able to fulfill their obligations and rights and responsibilities towards each other and towards other stakeholders. And for sure, Zakah is one of the important obligations which cannot be assessed properly unless proper financial reporting is in place. Accounting for the purpose of profit distribution and accounting for the purpose of Zakah computation may have some minor differences. So this is one of the important reasons that a standard on Zakah computation is needed. Let me give you a little bit background. We developed the Zakah standard in the early years of AAOIFI, and it was a very nice standard, very well written at that point of time. Uh, However, over the period of time, the industry has evolved, their accounting practices globally have evolved, and one very important aspect is that at that point of time, AAOIFI was mainly issuing accounting standards, but AAOIFI later started issuing Sharia standards as well. So initially there was no Sharia standard on Zakah, and the accounting standard was partially serving the purpose as well. However, later when we started issuing Sharia standards, we issued Sharia standard of Zakah as well, which has a very comprehensive computation guidelines in form of appendix there. So it resulted in a situation that there were, number one, some complications with regard to computation. Number two, there were some inconsistencies with regard to treatment of some of the items. Number three, there were, in accounting, we had two computation methods, while at the Sharia side, we had only one computation method. And number four, I would say that there, from the accounting purposes, there were some additional disclosures and new things that evolved over a period of time with regard to accounting, which were not addressed properly. So considering these main factors, we decided to initiate a revision project for Zakah. One of the most important purpose was to eliminate any inconsistency between the AAOIFI accounting standard on Zakah and AAOIFI Sharia standard on Zakah. We also considered what would be the relevant scope of work, because if you replicate everything on the Sharia versus accounting, it may result in further inconsistencies when either of these is revised, and it may also be a duplication of effort. So we considered from the scope perspective, and we discussed it at multiple stages, including our accounting board, and we decided that what will be the method of Zakah computation and how Zakah will be computed on each of the items, each of the assets, each type of the asset is primarily not an accounting issue, it's primarily a Sharia issue. While on the other hand, how the zakah is computed, how zakah reconciles with the net asset value, how zakah is to be reported as a liability or as deduction from equity or as attribution of profits or whatever form. So these are the accounting issues. So the accounting standard has to cover primarily the timing of recognition of zakah, how the zakah should be computed, and means not the computation model, rather the computation and disclosure part, and how what is the difference between the accounting base and the zakah base, or how the zakah is being calculated on different items without determining what should be the basis. The bases are primarily coming from the Sharia side. So users of financial statement should be enabled to know how much zakah is applicable on the institution, how much zakah is applicable on shareholders, how much zakah is applicable on other stakeholders, how zakah is computed, what are the assets and liabilities which are adjustable and deductible for zakah purposes, which are not. So these are the things that should be covered on the accounting side. So this will add on to the Sharia standard rather than just replicating the Sharia standard, or rather than just developing a computation guidance. It does not mean that a computation guidance is not needed. So we intend, once this project is completed, we intend to develop a computation guidance in line with the Sharia standard on zakah, because Sharia standard on zakah has guidelines available as appendix. So we can very well develop a joint project between accounting and Sharia boards as a computation guidance for zakah. Do we have any comment on this background, etc.?
No comments are provided. Only that there was a comment, Brother Umar, that if we have what you are speaking right now, if it's a part of the PPT. So I explained that it's a history of the standard that you explained.
Yes. PPT is only the standard. Normally, how we conduct the public hearings, because we have to hold, we have to take comments We have to take comments on each and every paragraph of the standard. So obviously some guidance, some general comments I will provide to save time for everybody's benefit. But with regard to the comments that we want to receive from you, we need to go take you through each and every paragraph. So the presentation is only based on the standard. It's just a copy of the standard. With that, the basic background I have provided already. So I'll just take you through the main points. In the introduction, I'll quickly take you through the main changes. What are there as compared to the previous standard? The revised standard is primarily a presentation and disclosure standard and does not cover the computation and measurement. As I mentioned, the computation and measurement should be done based on Sharia standard. And as I mentioned, that we intend to develop computation guidelines in line with Sharia standard. Once this project is complete, we hope that it will be a joint project between our accounting board and the Sharia board. The revised standard provides guidance on two main categories of institutions, namely institutions obliged to pay zakah and institutions not obliged to pay zakah. So in some countries like Saudi Arabia, like Kuwait, there are laws related to zakah. So the institution might need to pay zakah with regard to the shareholders. However, according to our understanding, most parts of the world do not have any laws related to zakah on the investment account holders. Some countries may have a little bit, like Pakistan has a law related to zakah on the account holders amounts, but that might not be in line with our Sharia standard, and it's a straight simple computation rather than proper computation. There are multiple issues involved in that. So considering those factors, it is important that each and every aspect is considered properly for zakah purpose rather than only computing on a straight basis of the balance. There is one very important aspect I would like to discuss here. I believe that if Islamic financial institutions are able to explore this opportunity, they may have a very good marketing ground for their customers by using this standard properly. How I'm saying this thing, just let's try to understand. For example, I have put a current account with an Islamic bank. Now the current account balance, whatever I have, is subject to zakah. If it is part of my nisab and all that, so it is subject to zakah. However, if I've invested that amount with an Islamic bank in a Mudarba account, and the Mudarba account main balance is invested as a ijara transaction, there is no zakah on ijara assets. So if the intention is to do ijara through Mudarba account, so there can be computation of zakah based on net balance and excluding the ijara balances, which means that the investor will have to pay much less zakah. Again, the objective is not to pay less zakah. Objective is to pay the right amount of zakah. And right amount of zakah cannot be paid unless the user of the financial statement, unless the shareholder, unless the investor has appropriate knowledge about what are the balances of different types of assets and what is the amount of zakah applicable per currency unit or per share or per currency unit of investments. This is just one example, but there are dozens of other examples that we need to understand, that providing this information is not only beneficial for the user, but at times it might be much more beneficial for the banks themselves. Institutions that are obliged to pay zakah and not obliged to pay zakah have different requirements. Those who are obliged to pay zakah will have further types. I'll take you through the standard, but those not obliged to pay zakah shall still make the disclosures. Our point is that all Islamic financial institutions shall make appropriate disclosures with regard to zakah applicable on shareholders, sukuk holders, investment account holders, and other stakeholders, so that our Muslim brothers are able to discharge their Zakah liability with due proper computation rather than just by estimations. And we all can understand that this will eventually help the Islamic economic system. It will help the Islamic social finance. It will help supporting the poor and the needy and the charitable work in our Muslim economies. So we at AAOIFI believe that it is a very important standard, and we need to do our part on that, which is the starting point is developing this standard. The accounting and financial reporting, such as recognition, presentation, and disclosure requirements, shall apply to institutions that are obliged to pay Zakah on behalf of certain or all stakeholders. Institutions that are not obliged to pay Zakah shall apply the disclosure requirements of this standard for certain or all stakeholders as relevant. Under the revised FAS, recognition, presentation, and disclosure requirements shall apply to all relevant stakeholders, not limited to shareholders, such as participatory stakeholders, unit holders of various pools, stakeholders, etc. General rulings of Zakah related to Sharia related to Zakah that are already covered in Sharia standards are not reproduced, including the computation guidance. The standard provides guidance on annual Zakah base specific to the institution, which includes the net amount subject to Zakah on annual basis. The annual Zakah base for the purpose of this standard shall not apply to those items that are not subject to Zakah on annual basis, such as agriculture produce. The revised standard provides the disclosure with regard to calculation of the Zakah base using the net asset method on valuation used to determine Zakah base. Net invested funds method for determining Zakah base is not included as a method. It was earlier, as I mentioned initially, that there were two methods allowed on the accounting side. One was net asset value method, and second was net invested funds method. So although technically computing both of them shall result to the same amount, but keeping both the options ready, option available, while Sharia standard is actually addressing one option, would have created some confusion. Similarly, some of the disclosures with regard to Zakah base, etc., would become irrelevant and difficult to provide in case of a net invested funds method. So we decided to keep only one method, that is net asset method, rather than net invested fund method. We will discuss each of these significant changes when we go to the comments. However, if there are any important comments, please let me know as of now. If we have any comment or any important question, we can take it now. Otherwise, these things will be discussed in detail when we reach each relevant paragraph. Do we have any comments, Sister Farida?
Yes, Brother, we have one from Mufti Kawaja. We can open the mic, or his question is, but then will this be restricted Mudaraba-based accounts? And also,
the quick answer is that it will apply to all type of stakeholders, including participatory stakeholders. So it means that for the restricted investment accounts, we need to provide disclosure in a similar manner. Just Sister Farida, note it down. If it is not mentioned in the standard, we need to mention. Although we mentioned about participatory stakeholders, which include RIA, but we need to be clear because they are off balance sheet. So we need to be clear that we need to provide this disclosure. If it is not mentioned, it is understood. But if it is not clarified, then it is better to clarify that Wakala based off balance sheet account and RIA based off balance sheet account, the restricted Mudaraba based off balance sheet accounts, shall be subject to this. Is it okay? Next comment. Next comment, sister.
Brother Saqib is asking about the appendix, but when we get there, we can answer it about the appendix.
Okay, Brother Saqib, it will be better when we reach the appendix, so we can have a further discussion there. Okay, coming to scope part, this standard shall apply to an institution with regard to recognition, presentation, and disclosure of Zakah attributable to relevant stakeholders. Standard does not specifically address the issues related to Zakah on certain produce, including agriculture produce, which according to Sharia is due on produce and not on annual basis. In respect of such Zakah, an institution shall develop its own accounting policy, shall make necessary disclosures with regard to the reconciliation of computation of Zakah, and shall follow the requirements of this standard insofar as applicable, as practicable. For the purpose of this standard, annual Zakah base is the total net amount subject to Zakah at the end of an annual period, maybe but not necessarily coinciding with the financial reporting date of an institution, but does not include the value of agriculture produce or any other produce which is not subject to zakah on an annual basis. Institutions obliged to pay zakah are such institutions that are required to pay zakah on net assets pertaining to certain or all relevant stakeholders, whereby one or more of the following conditions are met. When the law requires the institution to pay the zakah obligation, like Saudi Arabia, when the institution by virtue of its constitution documents is required to pay the zakah obligation, we are aware about some of the Islamic financial institutions, when the General Assembly of Shareholders has passed a resolution requiring the institution to pay the zakah obligation, or where the contract with certain stakeholders requires the institution to pay the zakah obligation. Sister Farida just noted down, I believe there is a typo error, requires, when the contract requires. Okay?
Okay.
Institutions not obliged to pay zakah are the institutions other than the institutions which are obliged to pay zakah, and include institutions which are not responsible to pay zakah on behalf of one or certain classes of stakeholders. Means that, for example, there is an institution which is obliged to pay zakah only for shareholders. So it means that it is not obliged to pay zakah on behalf of urea accounts and other participatory stakeholders. So it means that for the purpose of shareholders, it will be considered institution obliged to pay zakah. And for the purpose of urea accounts and other participatory stakeholders, it will be considered institution not obliged to pay zakah. This means that on part B for shareholders, they will have to provide computation and also will have to recognize zakah either as a liability or as an attribution of profits. While for part C, that is urea accounts and others, they will be obliged to provide only a disclosure so that the urea account holders and other participatory stakeholders may compute their zakah properly. Realizable value is the entity-specific value at which the institution is able to sell the relevant assets, that is, convert the asset in cash. Relevant stakeholder for zakah purpose includes but not limited to all those who provide capital in different capacities, such as shareholders, participatory stakeholders, etc. I think, Sister Farida, the comment we have taken for RIA, etc., we need to mention it here.
Yes.
Just add a comment here, and then we will discuss with the working group and board to improve the definition here.
Okay.
Okay. Zakah is a right, a religious responsibility of a Muslim, which becomes due in certain types of wealth and disbursable to specific categories of recipients in respect of the current annual period. Subject to different institutions, legal requirement, apostrophe shall be after that, sister.
Okay, noted.
It may be an expense to the institution or an obligation of the individual shareholders or other stakeholders. Zakah asset is the amount paid as zakah over and above the zakah expense recognized in the income statement, I should be small, as well as zakah paid through adjustment to equity for the current and prior years. Now, zakah asset concept is that if you have paid zakah in advance, there can be two reasons for that. One reason is at times Sharia allows you to pay zakah in advance. Particularly some institutions may be paying zakah in advance during COVID time. Even AAOIFI Governance Board recommended that if possible, it should be paid in advance during the COVID times. Similarly, in the countries where it is legally applicable, at times the demand for zakah from, like for example, from DZIT in Saudi Arabia might be more than the zakah computed as per Sharia guidelines. So till the time the assessment is not final and things are not finalized, it may be considered a zakah asset. Zakatable assets are those assets that are subject to zakah in line with the Sharia requirements on an annual basis. Zakah liability is the unpaid amount of current and prior year's zakah due. And zakah rate is the rate applied to zakah base in order to calculate zakah. Any comments on the definitions? Before we move forward, any comment on any of the definitions? Sister Farida, do we have any comment in
Yes,
writing or anybody want to ask?
we have a comment. Why is Ijara excluded from Zakah? Brother Khalid Elrag is asking why we exclude Ijara from Zakah. He says, I'm also working in banking service provider and we don't hear that banks obligate for Zakah.
Okay, there are two issues to this one. The first issue is why Ijara is not subject to Zakah. The concept is from AAOIFI accounting standards perspective, Ijara assets are owned by the lessor. And the assets which are owned by lessor, which are put into commercial use, are not subject to Zakah, like your own property, plant and equipment. So if I purchase a house and I want to give it on rent, this is not subject to Zakah. If I purchase a car on which I'm doing a rental business, it is not subject to Zakah. Zakah is on Amwalut Tijara, means that anything that is subject to trade, on that Zakah is there. Similarly, Zakah is on receivables and cash and similar items. But from the accounting perspective, if you consider Ijara, normally our Ijara is Ijara Muntahiyya bit Tamleek. So if you consider Ijara Muntahiyya bit Tamleek assets as conventional accounting equivalent, which is a net investment in finance lease. So in that situation, it becomes like a receivable and it is subject to Zakah. From the perspective of AAOIFI standards, it is a operating asset, and operating assets are not subject to Zakah. So this is a treatment issue. I know that in different countries there are issues with regard to that. Even in Saudi Arabia, there is issue with regard to computation of whether Zakah should be there or not. However, we believe that based on our standard, it should not be subject to Zakah and the majority view of the scholars. But again, it's not this is the accounting standard. I have just provided an example. Decision will be according to the Sharia supervisory board of the respective country of the institution, or the Sharia board, or the Sharia laws of the respective country with regard to Zakah. So if what we have provided as a computation guidance is only a illustrative reconciliation of computation rather than requirement. So from our perspective, yes, it is not subject to Zakah, but it may be. What was the second part of the question, sister?
There's another question from Muhammad Abdul Latif. He says in definition.
There was another part of this one, I think. The same one.
He says two, but there's only one here actually. Here's only type one question. There's a question on definition D, realizable value. In Zakat 35, the term uses market value according to the type of goods in the relevant market, wholesale or retail. So is this term have the same meaning?
There are two different meanings. From accounting perspective, US standards use the term market value, but we don't use market value. FAS and AAOIFI don't use market value. We use either of the two terms. One term is called fair value and one term is called realizable value. And realizable value has another type, which is net realizable value, which means that you can net off some of the expenses to that. When we say fair, what is the difference between fair value and realizable value? If I'm normally sitting in a normal active market, then fair value and realizable value will always be equal. However, the fair value is considered to be market prevalent value, and realizable value is the value that can be fetched by the party. So there can be two different situations. For example, I'm in a village and I want to sell cotton. So sitting in the village, the price that might be available to me might not be equivalent to the price that is generally prevalent in the market because of the limited resources and certain additional restrictions and the transportation and so many issues. So realizable value is the entity specific value as we defined here, while fair value is the market value that can be fetched in the market. We believe, and from the accounting perspective, we have put in realizable value for certain things, which is because Sharia standard is talking about market value, but whether it is the market value which is prevalent in the market or market value which is available to me as an entity. So from both perspective, we have to define it clearly. So we considered that for the entity perspective, the realizable value is the better term. And our understanding is that the market value term includes either fair value or realizable value depending on the circumstances of the institution.
We have other questions also, Brother Omar.
Yeah, please.
Yeah, there's another question.
If you can allow people to ask the questions, it
Yes,
might be even.
we can allow. I'll ask Noof, can you allow Wasiullah Sheikh Muhammad? He has a long question about zakatable asset and zakat payable. Noof? Sister Noof? I'm not sure maybe she can't. There's Wasiullah Sheikh Muhammad. He has a long question about zakat and zakatable assets. Because we have 51, we have to find his name. Wasiullah Sheikh Muhammad.
If you can raise hand, So if you raise hand, our team can easily identify you. Raise hand in the system. It will be easily identified.
Okay. No, Wasiullah has raised his hand. Wasiullah Sheikh Muhammad.
Assalamu alaikum, Brother Omar Sahab.
Wa alaikum assalam.
It was a very enlightening discussion. I had two questions actually. I'm from India and working in Tasis.
Pleasure having you here, brother.
Yeah, sir. In India, what we are doing is we are considering investment in Sharia compliant stock as currency, and we are taking out zakat, 2.5% of investment value. So, but I had a doubt whether we need to calculate zakatable asset of particular company stock and then pay zakat on that, or what we are doing right now is only the correct thing. And
brother, okay, please, you have to add something?
Yeah, only one more question.
Let's first address this question, then you can have the second question. Let me address this question first. Number one, this standard is about presentation and disclosure and computation shall go according to the Sharia standard. So first thing we need to understand. Okay, but even from accounting perspective, we consider these aspects. So one of the aspect is intention. So if I am investing in that share capital of that company with the intention that I will have short-term capital gains and maybe some dividend, but short-term capital gains, and then the price goes above, I will sell. So it means that this share capital that I have purchased, the number of shares, it is my inventory because I'm going to sell it in the market. The idea is to sell it. Idea is not to keep it for long and earn from the cash flows that the company is generating. Rather, objective is to get the cash gain, capital gain on sale and purchase of shares. So in that situation, the share fair value of the share, because shares are normally listed, so their fair value is actually whole zakatable. So we will not go inside the balance sheet of the bank, of the institution, and will not go inside and see what type of assets are there and what type of assets are not there. Coming to the second type, when we have an investment objective, not capital gain, short-term capital gain or trading objective. So when I don't have a trading objective and I have a investment objective, it means that I want to invest in the proportionately, because as much number of shares I purchase, it is my proportionate ownership in the business of the company. So in that situation, I need to see what type of assets of that company are subject to zakah and what type of assets of that company is not subject to zakah, and then I need to make the computation and pay zakat accordingly. So the same guidance which is provided in this standard may be used to apply there. However, let's understand two things. Number one, this is an accounting standard, not the Sharia standard. So you first need to refer to the Sharia standard for the computation part. Secondly, this intention part again has to be considered in line with the Sharia requirements, because Sharia determines how intention is to be considered in those aspects. Second question, please.
Is the zakat calculation methodology for both listed and unlisted stock is same, or we have a different method?
For unlisted, we can clearly understand that unlisted are not generally for trading purpose. So it means that when I mentioned two different methods, they were there for the listed, because in the listed you have a short-term capital gain aspect or a long-term investment aspect. But when you invest in unlisted, normally in 99% cases, the purpose is long-term investment. So only the second method shall apply, which is the computation part. You will go to detailed computation and you'll see what type of assets are subject to Zakah or not. For example, property, plant and equipment of the company are not subject to Zakah. Just one example.
Right.
Okay. Do we have any other questions? Yeah, please.
Thank you very much.
Sister Farida, do we have any other questions on definitions?
There was a request, can we define NRV, net realizable value?
Net realizable value is defined in other standards as the realizable value minus cost necessary to make the sale, and if there is a cost necessary to complete the thing. So it is defined in other standard. I think in FAS 28 it is defined. It is less relevant for this standard, so we did not duplicate it, but in FAS 28 it is defined. So net realizable value is the realizable value minus cost necessary to make the sale. Any other comment?
There is another one for paragraph 4G. It is easier to be explained as Zakah in advance. 4G for Zakah assets. It's easier to explain as Zakah in advance.
I think it's there is a good comment. This is a good comment. Although we use the term Zakah asset and Zakah liability to make it consistent, because we consider also the tax related requirements, and tax also call it tax asset and tax liability rather than advanced tax. Although advanced tax is more common term, but I think it's better to mention it. So we can mention Zakah asset, also referred to as Zakah in advance or advance Zakah paid. So it's a very good comment. We will suggest the working group and the board to add this one as a edit item. However, Zakah asset and Zakah liability are consistent with tax asset and tax liability, and some of the approaches you will see for this one are similar to tax accounting, because AOIFI has a clear approach and a strategy on the accounting side that we keep our standards as consistent as possible with the international financial reporting standards and other global good practices. So we will we can add it as an explanation here. But again, we will ask the board if they want to change it altogether, we can change. Otherwise, at least to add it is a good idea for sure. Thank you very much for your comment. So let's move ahead. We can take further comments going forward. And if you forget any comment right now, you can send them later to us as well. Recognition of Zakah as current expense. So this is about institutions obliged to pay Zakah. An institution obliged to pay Zakah by law or by virtue of its constitution documents like articles and memorandum of association, as well as any statute or any other document, shall recognize current Zakah expense in its financial statements in line with the requirements of paragraph 6. Current Zakah expense or reversal thereof, therefore, for the current and prior period shall be recognized as expense or reversal of expense and included in profit or loss for the period unless paragraph 7 applies. Zakah expense or reversal thereof from a transaction or relevant balance in which is recognized in the same or a different period outside profit or loss, either in other comprehensive income or directly in equity, shall be included in the relevant statement. Now, what we want to say here, we are saying that if your country requires you, the law of the country requires you to pay Zakah, or if by the constitution documents of the institution themselves it said that they will pay Zakah, institution will pay Zakah on behalf of the stakeholders, then it becomes a liability. So whenever the Zakah becomes due, it becomes a liability. You can go by the lunar model or the solar model. This issue is also covered by Sharia standard. It was covered by accounting standard earlier as well. We have not gone in that much detail this time, but it can be the financial year. So solar, in case of solar year, you need to pay a little bit more than 2.5%, which is specified in Sharia standard. Or in case of lunar, it means that you need to prepare financial statement as of the lunar year end, which will be difficult for each Islamic financial institution. So we are not requiring it to be on a lunar basis, on the basis of moon. Rather, we are okay with doing with in line with your annual financial reporting period. However, what we are saying here is that if it is legally applicable, if zakah is legally applicable, and legally applicable means that by virtue of law or by virtue of your constitution documents it's legally applicable, then zakah shall be recorded as an expense of the institution. So it will come into profit and loss account. However, if for example I have investment in sukuk, those sukuk are subject to zakah. And what happens that if those sukuk are subject to zakah and their relevant income, because I'm keeping them available for sale and their gain or loss is going to the other comprehensive income or directly in equity according to old standard and other comprehensive income according to FAS 33. So what happens that if I take their zakah, 2.5% zakah in the income statement, and I take their gain, whatever gain is there in the other than dividend, if there is any fair value gain, I take it to the other comprehensive income. So what happens that there is a mismatch. So we are saying that the gain or loss, wherever it is taken, that proportion of the proportion of zakah related to that asset should be taken to that statement rather than income statement. So if all your gains and losses are coming to income statement, there is no problem. But if there's some of part of it is going to other comprehensive income or equity, statement change equity, in that situation, the relevant part of zakah should be taken there to avoid mismatch in the accounting. Any comments on this paragraph 5, 6, 7?
There's one comment, Brother Umar, paragraph 5. It says, for consistency and comparability between the issued finance.
Sister, before reading, just let's ask anybody who want to ask the question better. If they can ask them.
We have asked them to raise hands, but there is Muhammad Al-Hilo who has raised his hand.
Yeah, please.
I don't know whether he wants to. Mr. Muhammad Al-Hilo?
No, those who have written the comments, they can also ask the questions themselves to keep it interactive. Unless there are too many comments, I'll prefer all the questions to be asked by people themselves rather than we just reading them out. Unless they want us to read them out.
There are about
Assalamu alaikum.
Wa alaikum assalam.
Brother Mustafa Khwaja Nurul Hassan Haim from Pakistan just wants to ask a question regarding your previous slide. You are aware that in Pakistan, when defining the value, what value can be considered between the parties, there is a term used, agreed value. So the agreed value can be considered as a fair value, though the lesser than the market value, realized value, or not?
Realizable value. Actually, agreed value is the realizable value, Brother Khwaja. Because if you see that fair market value can be different than that, but agreed value in normal situation would be realizable unless an undue favor is there for one of the parties. So, for example, there is a phone that can be sold in market for 50,000, and I'm selling you to 45,000 because you are the first easy option available to me to sell. So this is my realizable value. I don't want to go to the market. But if you are my brother and I sell you to 35,000, then it will not be considered as a realizable value also. So if it is the easy, every time you don't need to go to the market, you need to see what is the real situation. So this is the difference between realizable and, so if the agreed value, that you are talking about is based on arm's length, means that it is between knowledgeable, willing parties and they are doing the transaction in good faith, then it may be considered a realizable value. But when you go and find out the best buyer in the market, you may get a little bit more than that, or maybe a little bit less than that. So market value and realizable value we kept separate.
No, basically, initially we have a formula for the value. Such as in syndicate transaction, we only look to the outstanding amount, and in case of any liquidation, in case of any default, we agreed on a formula. This value of sale, the sale value will include A plus B plus C. So A plus B plus C.
This will not be realizable value unless you feel that you will be unable to sell it to somebody else. If you feel that you will be unable to sell it to somebody else, then it is still a realizable value. But if it is because of another business arrangement between the parties, in that situation, it will not be considered a realizable value. It will be so agreed value. If agreed value is between knowledgeable billing parties without any undue influence, then it may be considered realizable value. But if it is not between the knowledgeable billing parties, then in that situation it is not considered to be realizable value. It is actually an agreed value. Agreed value can be one. According to Sharia, even if I want to sell it for only one or notional amount, I can sell it. So you can say that the agreed value is one. So this may not apply for zakah purpose. But if it is between knowledgeable and willing parties, without undue influence and without having another business arrangement and linking with that, in that situation, it may be considered as realizable value.
Okay, so it means in cases of zakat, there's a difference of interpretation definition between the fair value, realized value, and market value. However, in cases of financing,
brother Nurulson, Sharia standard talking about market, and we understand that even traditional fiqh normally talks about generally market. But when you come to what is the market value or what is the value at which it can be sold, from accounting perspective, it is divided in two parts. One is realizable, one is fair. So fair means you actually need to go to market and do the computation, and realizable means that what is available to you.
Thank you.
Just remember, realizable value is always entity specific, means that it can be different from entity to entity, and market value is only one in the market. Okay.
These definitions were mentioned anywhere or extracted from the accounting perspective?
Actually, some parts are understood, brother. Secondly, as I mentioned, brother, this is not the Sharia part of the standard. This is accounting part of the standard. So these issues we do not want to interfere into further because it will be overriding or overlapping with the Sharia part. So we tried to remove any inconsistency between our standard and Sharia standard. So we have actually mentioned about how to disclose, how to account for, how to present. We did not put the requirements with regard to how to actually compute. Okay. Okay then. So do we have any other comments, sister?
Yes, Muhammad Jasim. We have
Whether you want to ask yourself or
yes, he's allowed to. We've given him permission to speak, so he can ask his question.
Please.
Assalamu alaikum. You can hear me?
Yes, brother. Welcome.
Yes. I have just a comment regarding paragraph number 4.
Yes.
That, as mentioned, no, it was on the screen, that the previous.
Okay. Paragraph 5.
Yes. So here it is mentioned that an institution obliged to pay zakah by law or by virtue of its constitution documents. Now, I think here there will be like a consistency and comparability issue between the financial institutions if we are mentioning the constitution documents. Because if each financial institution will issue its own documents of constitution document and article of association, and it will mention that it will be in the expense, and other company might not mention that will be as expense, so it will be through equity. So I think there will be a comparability issue between the financial statements for the Islamic financial institutions.
Very good point, brother. We don't have a disagreement on this part. We don't have a disagreement with you. But the problem is, brother, that this thing already exists. AAOIFI's standards, we are talking about fully or partially or a guideline adopted by 27 countries, 40 regulators. Now, every one of them would have a different treatment. We were giving example of Saudi Arabia and Kuwait, but Saudi Arabia and Kuwait don't adopt our standards officially. Other countries that adopt our standards, majority of them do not have a direct requirement for zakah computation. So what we want to bring in by this standard is maximum consistency in disclosures. But if there is a country where this is the requirement is there, similarly we know that, for example, Al Baraka Group, they make the computation and they pay zakat at the institution level, at the group level. There are others, according to my knowledge, there are other Adib, Abu Dhabi Islamic Bank also computes it. There are so many Islamic financial institutions. They have it either by resolution of shareholders or by main requirement. So the point is, Zakah is there. We all know we are Muslims, and Zakah is as applicable as Salah. You know that actually, for not paying Zakah, he actually declared war against Murtadeen. So we need to be clear on this part that this is applicable. As AOFI, we are doing our effort to bring the practices as good as possible. This standard is primarily a presentation and disclosure standard. As I mentioned, computation part is as per Sharia. But when we came to presentation and disclosure, we realized that there are different type of institutions who are subject to Zakah. Some of them are not disclosing anything. Some of them are disclosing. Some of them are recording as liability. Some of them are recording as a attribution of dividend. So we had to consider all these aspects, and then we tried to bring something closer. The inconsistency, brother, that you are talking about is already there. And we, even if we bring it as an accounting standard, it will not make, for example, we say that in the accounting standard, we say all must record as a liability and no must pay. How we can ask them to pay? We are the accounting standard body. We are not the regulator, or we are not the government of the country. So even if we want to do this consistency, we cannot bring it. So the standard is to bring maximum consistency as possible in line with the requirement. Thank you for your comment, brother.
Okay, you're welcome. Thank you.
Okay. If you ask me, I would love to say that every Islamic financial institution must compute zakah and must pay it in the books.
No, but what is mentioned here, that if it is by law, this is the issue. If it is by law, it will be recorded as an expense.
Yes.
Okay. And the other thing, if it is part of the constitution documents of the financial institution.
There is a legal issue in that. When we go to the legal issue, what happens that the constitution documents of a company or institution, when they are approved by the regulatory authorities, they become part of law for that entity. For example, AOFI has something written in its statute. So AOFI cannot go out of its statute. So any institution that has anything written in the statute or the founding documents like memorandum and articles, it cannot go out of that. So it becomes a contractual obligation. Try to understand. It becomes a contractual obligation from legal perspective, because the memorandum of association between the shareholders of a company, when they form the company, it is a legal binding contract between the parties and a binding legal document on the company. So we considered this aspect. So we considered that if you have it in your constitution document, then it is equivalent to having it in law, because it becomes a contractual and legal obligation. From accounting perspective, we defined it. While on the other hand, if there is a company where the shareholder said, we want the institution to pay zakah, so the shareholder resolution is there. Every year they pay. But after 5 years, shareholders stand up and say, we don't want it to be paid. We will pay ourselves. So the resolution will be reversed. While in the memorandum and article, if you have written it in the constitution document, you have written it, it cannot be reversed like that, because it's a binding contract between the parties and it is legally applicable. So that's why we still keep this difference.
Okay.
But your comment is very important, brother. We'll take it to the working group and board for the consistency part, if they feel any more consistency can be there. And if you ask me, I would love to put it in the standard that every institution must pay zakah, so that it will be good for the ummah.
Inshallah. Thank you so much.
Okay. Where zakah is not required to be paid by law, this is the second option, recognition of zakah as adjustment to equity. Where zakah is not required to be paid by law or by virtue of constitution documents, and where the institution is considered as an agent to pay zakah on behalf of the stakeholders, any amount paid in respect of zakah shall be adjusted with the equity of the relevant stakeholders. So means that if I'm paying on behalf of sukuk holders or urea account or shareholders, if it is as per a resolution or as per other understanding, then I will adjust it with their equity. It will not be a it will not be an expense of the institution, rather it will be out of the distribution. Just one thing, Sister Farida, please note it down. Quickly, I cannot go back to the base of conclusion. We'll check it later. But if you note it down, that this question of our brother about this constitution documents is very important. So we must explain it in the basis of conclusion. Once the board agrees with our explanation, we must explain it in the basis of conclusion if it is not already explained. That why we kept it like a law and why we did not keep it in paragraph 8. Okay? In case of insufficient distributable reserves available in equity to meet the relevant stakeholders' Zakah obligations, the amount paid by the institution shall be recorded as receivable from respective stakeholders. So, for example, for shareholders, the Zakah was 2.5%, and the amount available was 1.5% only in the reserves. The amount that was available in the equity as distributable reserve was 1.5% only. So 1%, which is the pending amount, will be paid. 1% will be receivable from that. This applies to where it is as adjustment to equity, not as an expense. The first part, if you see paragraph 5, 6, 7, if zakah, if for example companies break even and we still have to pay zakah as per legal requirement or as per constitution, then it means that after paying zakah we will end up at a loss. However, in 8 and 9, the second option, it will not be taken to income statement, so the loss will not be there. However, it will be taken out of distribution and out of the equity. So it means that if there is a shortfall, then it will be recorded as a receivable from the respective stakeholders. Any comments on 8 and 9?
No comments, Brother.
Okay. Recognition of zakah liability. Current zakah obligation shall be recognized as a liability in the statement of financial position of the institution. If the amount already paid in respect of current and or prior period zakah obligations exceed the amount due for those periods, the excess shall be recognized an asset in the statement of financial position of the institution. Any comment? Well, we already discussed this advanced part, so we will mention it if explanation can mention that it will be zakah in advance. So do we have any comment on 10 and 11?
We don't have comments so far.
Okay. Institutions not obliged to pay zakah. In case where the institution is neither obliged to pay zakah nor asked to act as an agent, the institution shall disclose the zakah base and amount of zakah per share or unit for certain or all relevant participatory stakeholders for the current year. Sister, just one thing, explanation maybe we need to provide that it includes that partially obliged to pay zakah and not. In that definition it is clarified, but this clarification might still be needed here.
Okay, paragraph 12.
So do we have any comment on paragraph 12?
No comments so far.
Okay. Now coming to presentation and disclosure requirement, which is the main requirement for this standard. In addition to general presentation requirement of FAS 1, an institution shall disclose the following as minimum disclosure requirements. Okay, just one clarification. It is in FAS 1. Our earlier FAS 1 required a separate statement for zakat and charity accounts. It was a primary statement. Now we are revising FAS 1. The first exposure draft of FAS 1 has been issued, and the framework has been revised, and exposure draft was issued, and final will be issued shortly. Zakah statement is no more a primary statement. It is still a disclosure requirement, but it's a statement within the notes rather than a primary statement. There were multiple reasons to that, because it's a fund under management. It's not a primary financial statement of the institution, and for a lot of institutions, it's not applicable. So this is one of the important changes brought in by FAS 1, not by this standard, but it means, but we have significantly enhanced the disclosures. So the earlier one was asking only a statement, but there were not enough disclosures required. But our new standard makes that primary statement as part of notes, but much more and much relevant disclosures are required now. The method for determining zakah base, the items included in its base and its reconciliation thereof should be provided. Appendix B provides an illustrative disclosure for the same. We will go to that now. I think Brother Saqib asked a question about that. So we'll go to that after this one. The relevant authoritative guidance, for example, AAOIFI Sharia Standard 35, regulatory requirements or guidance from the institution Sharia Supervisory Board used for determining, sister, before or there should not be comma.
Okay.
Used for determining such method shall also be disclosed, including the ruling of the Sharia Supervisory Board of the institution on the issues. Rulings of the Sharia Supervisory Board of the institution, it should be S, huh? Related to Zakah that are not included in this standard. Zakah per share and per unit basis for each pool or category of investments, whether it is paid by the institution or otherwise. Sister, just note one comment. I think we discussed earlier this one, products per unit or per currency unit. Just note it as a comment.
I put it as
we need to consider how to incorporate that. A reconciliation between Zakah liability and expenses presented in the consolidated financial statements and those presented in subsidiaries individual financial statements. Sister, individual we don't say, we say it either standalone or separate. Just note it down. Instead of individual, we need to call it separate or standalone as per other practice, standard practice. A statement as to whether or not the institution collects and pays Zakah on behalf of participatory stakeholders and other accounts. In circumstances where Zakah paid to a single charity is more than 5% of total Zakah payable, the nature of such payments and details of the recipient should be disclosed. A single charity, the term charity, we need to identify a single person or charitable institution. Sister, just note it down as my comment. The difference between amount of Zakah is required by law and Zakah determined voluntarily in line with the requirements of AAOIFI Sharia Standard 35 Zakah and relevant guidance. The amount of Zakah that is due from the equity of participatory stakeholders. The amount of Zakah allocated or paid for certain or all stakeholders. Where the institution has agriculture produce, the accounting policy for determining Zakah base of such produce along with the amount of Zakah due on the produce. If the Zakah due from the institution to the Zakah fund as well as amounts of Zakah received from other sources of fund shall be presented in accordance with AAOIFI FAS 1. And any disputes between the institution and relevant Zakah authorities, including the amount and period to which dispute belongs along with the reasons of such dispute. This applies in those countries where the government collects Zakah. So these are the general disclosure requirements with regard to Zakah. Any comments on paragraph 13?
No comments on the chat, Brother Umar.
Okay, we can take it later as well. Now coming to Zakah fund 14. Where the institution has established its Zakah liability, the same with corresponding assets shall be transferred to Zakah fund immediately. Zakah fund shall be treated distinct and separate from the institution, similar to assets under management. Such assets shall not meet the definition of asset of the institution and hence shall not be available to the institution even in case of bankruptcy. Where Zakah fund is invested, it shall be in accordance with the policy to be duly approved by the institution Sharia Supervisory Board, developed in line with Sharia principles and rules, particularly AAOIFI Sharia Standard 35. The illustrative disclosures in respect of sources and uses of Zakah fund is attached as Appendix C. So it was a primary statement along with charity. Earlier it was charity and Zakah combined, and it was a primary statement. Now we segregated Zakah and charity. Charity will be disclosed separately, Zakah will be disclosed separately, but there will be a statement, but this will be part of notes rather than being a primary statement. Any comments on paragraph 13, 14, 15, 16 before we go to the appendix?
Brother Umar, there's a comment, I think, from Brother Muhammad Abdul Latik.
Assalamu alaikum, brother.
Brother.
How are you? I'd like to return for 13I. It is mentioned the amount of Zakah allocated or paid for certain or all stakeholders. Do you mean paid for or on behalf of? It's a little confused for me.
Paid for on behalf of. Exactly. The amount of zakah allocated or paid for on behalf of. Exactly, brother. Thank you very much. Item I, 13I, the amount of zakah allocated or paid for on behalf of certain or all stakeholders.
Okay, another question for disclosure. When we have, for example, tier 1 sukuk or tier 2, okay, is by this disclosure, we have to also disclose the method or base assets for them as separately?
Exactly. So those sukuk holders should have the knowledge that what is the underlying asset and what is the amount per unit for zakah if they want to pay zakah themselves. If the contract of the sukuk instrument contract says that you need to pay zakah on their behalf or the SPV need to pay zakah on their behalf, it will be paid and disclosed. However, if it is not required to be paid, in that situation, only a disclosure is required. So let's understand one thing. We are asking Islamic financial institutions as of now, there is no requirement to disclose zakah on behalf of all stakeholders. Now we are saying this is by this standard that all IFIs must prepare a disclosure statement, provide all the disclosures in required line with this standard, even if it is not required to be paid, but computation and disclosure is required. This is very fundamental to Islamic financial institutions, because if you ask on the financial matters, what is the first and the most important part on financial matters of Muslim? Zakah. And we are not making enough disclosure as of now. So we want that disclosure to be there even if the payment is not required by law. So
will be included?
Yes. Sorry, please.
Urea will be included also to disclose?
Yes, urea also. So it has to be disclosed for urea, it has to be disclosed for sukuk, it has to be disclosed for ria. Sukuk and I think ria was not mentioned. There was a comment from brother in the beginning. So ria is not specifically mentioned, so we need to specifically mention. But when we say participatory stakeholders, it includes sukuk and it includes urea.
Okay, another last question is, when we face calculation the zakah, especially from asset side, there is a question also how to determine, the assets was been shared between investment holders and shareholders, deposit holders. Okay, so are there any requirement to disclose the way of and how we calculate the share of investment holders?
Brother, this is a very good question. Let me take you after this discussion. We'll take you to the appendix. In the appendix, you will see how we have recommended, but this is illustrative. So somebody want to present in a different style, they can do it. But we'll take you to the appendix and we'll show how to disclose it.
Okay. In appendix, I have another comment. So.
Yeah. So you want to have another question after this or with the appendix?
In appendix, I have.
Okay. So we'll go to the appendix, then we'll see your this comment also. Okay. The effective date will be, if we approve within this year, our target is to approve within this year or within within this year means within 1 year of the issuance of exposure draft. So I think in the first quarter of 2021 we may finalize this one, or till mid of next year. We are holding one more public hearing shortly in Arabic language, and after that we will try to finalize the standard as soon as possible. So 1st January 2022 will be the effective date. This standard will supersede our standard number 9 zakah, old standard on zakah. It will be superseded. Let's go to appendix B, illustrative disclosure of reconciliation of zakah base. Now, if you see, we are saying it is illustrative basis. When we say illustrative basis, it means that there is a possibility that according to your law, according to the Sharia rules, according to the decision of your Sharia board, there can be a different basis used. So we clearly said basis of valuation for accounting purpose, illustrative only. Okay. So cash and cash equivalents at historical cost or fair value, receivables at par value. So this is the accounting purpose, and basis of valuation for zakah purpose also. It has to be sister illustrative only has to appear on both sides.
Okay,
Sister Farida?
Yes, I'll add it.
Illustrative only has to appear on both sides. Basis of valuation for Zakah purpose also has to appear on both sides. So the value, so this statement will provide a basic idea about how the valuations are calculated on both ends. Okay, so from the accounting perspective, what value we are assigning, and for the purpose of like computation, what value we are assigning. For example, on the receivables, if we have Muraba receivables, on the accounting side, deferred profits are net. But from the Sharia perspective, the deferred profit should not be netted off on the Zakah computation. So it means that on the deferred profit part, we need to pay Zakah. This is just one example. There will be a lot of more examples like that. Similarly, on Mudarba financing, if Zakah is not paid by the venture, then realizable value of net assets subject to Zakah. So there can be different computation options. So let's quickly go through. Receivables will be par value less amortized profit, and the deferred income I mentioned. Mudarba and Musharaka, accounting side as of now is historical cost less undistributed losses, while on the basis of valuation for Zakah purpose will be net realizable value of net assets subject to Zakah and Mudarba venture. Salam par value, Istasna par value, assets for trading. Accounting is lower of cost and net realizable value, but from Sharia perspective on Zakah, it should be realizable value. It can be even more. Assets for trading, inventories, net realizable value. In inventories, why we said net realizable value? Because even cost to complete is also important at times. So we mentioned net realizable value. Marketable securities, fair value. But on the accounting side, some of the marketable securities like some sukuk may be continuing on the amortized cost, but Zakah will be applicable on fair value. Real estate for sale, fair value and historical cost is depreciation, while on the accounting side it will be on fair value. Now on the Zakah side it will be on fair value. Real estate for rent. Now this is one good example. Real estate for rent and own use from Zakah perspective, it will be assigned zero value. Sister, here it should appear when we mention not applicable, in front of it, it should appear nil.
Yes, it should add it nil.
Also for provisions and constructive obligations. Now there are liabilities. What liabilities are subject to adjustment? So current accounts will be subject to adjustment because they are a liability on the institutions, payable due to be paid during the next financial period. Other liabilities due to be paid. Provisions and constructive obligations. Sister, just note down one thing here. There was a discussion in the working group with regard to be paid during the next financial period or due.
Yes.
Because long-term and short-term issue is there, so you need to put a steric mark, and we need to put a footnote here that it has to be accounted for on short-term or long-term in line with Sharia rulings. But provisions and constructive obligations, including onerous commitments, they will not be subject to adjustment from the asset because they are not established liabilities. So they will be not applicable and it should appear at nil. Now with this, if you see, we are computing here. So now we have the total value for Zakah purpose, assets minus liabilities. Then we calculate Zakah based on that. We did not put 2.5% because it's based on solar normally. So it will be based on solar year. Or if it is based on lunar year, then you need to make according to that. Then other Zakah, for example, which are assets which are not subject to normal Zakah, for example, animals, agriculture produce, mineral resource, etc. Bracket is not closed in the footnote. Sister?
Okay.
Bracket not closed in the footnote. I don't know whether it's a typo error here or a typo error in the main standard. Please check. Okay, so now we compute the total Zakah here. Then we calculate Zakah attributable to shareholders, total and per share to be disclosed. Then non-controlling interest to be disclosed. Different classes of quasi-equity and participatory stakeholders to be disclosed. This partially addresses the question of our brother because in some situation there can be multiple pools. So this computation may need to go on a pool to pool basis. in that situation, you will have to make this computation, the whole of this computation for each pool separately. But if there is only one pool of assets, then you can easily attribute to shareholders, not controlling interest, and quasi-equity and other participatory stakeholders. But if there are multiple pools, then it means that for the purpose of computation, you need to make for your internal workings. For your internal workings, you need to make multiple computations for each of the pools for this one. And then, however, in the financial statements, the disclosure of overall basis shall be based on a consolidated basis, because you may have multiple pools, you may have some subsidiaries, and all of them will be calculating it separately. So you may have the similar disclosure, similar computation like this illustrative disclosure, but this will be applied on each pool, and then in the financial statements you can publish only a summarized one. Do we have any further comments on this one? Brother Saqib, you had a question?
Yes, I have question.
Yes, please.
Your return to asset, please.
Which one?
This previous one.
Assets, yes, please.
Yes. This real estate for rent, cannot be to applicable zakat. Why?
Yeah.
Yes. Why is this not applicable of zakat? Is if the real estate of rent for pool of zakat, we do double zakat for rent. Why? I take it payment every month or every year for rent. This money go to cash. This money for rent go to my cash. Okay, I pay zakat in cash, and again pay zakat for real estate rent. This double paid of zakat.
Brother, I think we are at the same page, slightly difference of like style. Because if you see, if the cash is generated, cash goes to cash and cash equivalents. So yes, that is something. So if you go on the first slide, so whatever has been, because now we are talking about the whole institution, it's not about a single person. For a single person, we say, yes, you need to pay zakah on the cash balance that is generated out of it. But this is the institution, so the cash is already going from the accounting system. Cash is already going to cash and cash equivalent. So it will be subject to zakah at the realizable value. Real estate for rent and own use is generally operating asset, and operating assets are generally not subject to zakah. So we have put it like this. I think we also kept silent on ijara because of some of the difference of the opinion, because the computation part, again, as I mentioned, these are our illustratives only. Computation part will be determined according to AAOIFI Sharia Standard 35 and in line with the zakah regulations of the country and in line with the Sharia zakah related rulings of the Sharia board. So our issue here is just to provide how to disclose these things. Any other comment, brother?
Yes.
Any other brother has a comment?
Yes,
if you
yes.
don't have a,
yes, second
page,
please.
Second page? Next
yes.
page?
Next page, after page.
Yes.
This non-controlling interest. I think this non-controlling interest, this amount should be put it after liability.
You are right. In the financial statements, we put it above liability before equity, but now it's part of equity. According to the new standard, it's part of equity. So what we are saying here, when we said shareholders, it means that it is the shareholders of the parent entity. Non-controlling interest is the shareholders of the subsidiaries who are not who are other than the parent. So it is just a disclosure requirement in the consolidated financial statements, because when we make all this computation, we will have to determine how much is payable by the group shareholders and how much is to be paid by other shareholders and how much to be paid by different classes. So this, from the disclosure point of view, brother, the sequence of where it appears is in FAS 1 and framework and the consolidation standard. But Here we have just identified what is applicable to them. So the sequencing is not an issue here. We can change the sequencing as needed.
Okay, but I'm sure this non-controlling interest should be after liability, not put it from, not allow it from shareholders share.
Let me explain. So actually the earlier standard, if I remember correctly, the earlier standard was computing only for shareholders. So if I remember correctly, the earlier standard, since it was with your permission, I'll just recheck the standard as well. Earlier standard showed it after liability, if I'm not mistaken. Reason being because that it was considered to be computed only. Zakah was considered to be computed only for shareholders.
Yes, only for shareholders.
Now I found it. How you are saying this. But brother, now the standard, this standard has a different approach. This standard is not computing zakah only for shareholders. Your point is very valid. Thank you very much. It's a very valid point. According to the old standard, you are exactly correct. But according to the new standard, we are not calculating zakah only for shareholders. We are calculating total zakah. If you see in this page, we are calculating total zakah. Then we are saying how much applicable on shareholders, how much applicable on non-controlling, and how much applicable on different classes. Like others. So each class to be identified. Sister, just note it down. Each class to be identified. And we need to put it in bracket that each class to be identified, and non-controlling interest also be identified separately for each of the subsidiaries, etc.
Okay.
I want to more clarify this. You know, this financial institution, this owner an asset, the financial institution, shareholders and depositors. Okay.
Yes, agreed.
Yes. This.
So, brother, what we did in the first paragraphs, if you see in the first 2 pages, we did not segregate what was related to shareholders and what was related to investment account holders, depositors, and others. We calculated total zakah. Then we are saying how much zakah out of this, if it is a 100 BD, then out of that 100 BD, how much is pertaining to shareholders, how much is pertaining to non-controlling interest, and how much is pertaining to different classes of equity and participatory. For further detailed disclosure, it will be identified for each one of them separately. But as I mentioned, for different pools and different subsidiaries, it will be calculated. This is only the consolidated picture. But in the individual calculation, we will make it this same calculation for each one of them. Maybe, for example, consolidation purpose, we will make an Excel sheet for each one of the pools and each one of the subsidiaries, and then we will make a total computation. Here in the financial statements, we are asking only the total computation to be disclosed. But for individual financial statements and individual balances, you need to identify for everybody.
The asset and this asset, zakat, Paul, minus liability. What remaining amount? This remaining asset of shareholders only. Why? Why? I allowance the liability for creditor and investment account from asset. I think this remaining amount or asset remaining this related to shareholders only.
Brother, if you allow me 2 comments here. Number 1, the framework, if you go and see our framework and also see the old framework, new framework is also near final. Exposure draft was issued, but near final, it will be issued very shortly. The definition of owner's equity says that it is the net assets after, net assets means assets minus liabilities after quasi-equity also. Quasi-equity means the PLS, the profit and loss depositors, urea, participatory stakeholders, etc. So the new definition is not only asset minus liability. According to IFRS, it is asset minus liability, because IFRS considers PLS deposits and urea accounts as a liability. We do not consider them as a liability because they are not guaranteed and they are not they are sharing the net profit and loss of the respective pool of assets, the underlying assets. So we consider our treatment from IFRS is different here. So our definition of owner equity is slightly different from the definition of owner equity of the IFRS. So that is part one. Part two, we also want the Islamic financial institutions to disclose how much zakah is applicable on depositors and investment account holders. That is the reason that we changed this model. The old standard was, according to your earlier comment, where the quasi-equity was reduced from the assets to find out the net assets of the shareholders only, because it was about the shareholders' zakah only. This standard, the biggest difference between this standard and the old standard is that it is not about only zakah of shareholders. It is about zakah of the institution applicable on different stakeholders. So it's a huge difference as compared to the previous one. But for sure, brother, we will take your comment to the board. We will see if the board, consider your comment and want to come back to this one. But again, to be honest, this was a conscious change brought in this standard as compared to the previous one, because previous one was talking about shareholder only, not other stakeholders.
It means when I calculated the zakat based on the approach, I paid the zakat for institution, for shareholders and investment account.
Brother, in the old model, you calculate only for shareholder. In the old model, you don't calculate for investment account holders. Now, in the new model, you calculate for it.
This model for
in this
shareholders and depositor account?
Other than current deposits. Only, brother, other than current deposits, because current accounts are a liability. And other PLS, profit and loss sharing deposits, or urea accounts are not a liability. So for them, we are calculating zakah. Because for current account, it is straight zakah. Because it's a liability, it's a receivable for them, there is a straight zakah. And it's not our responsibility to disclose. But for the investment account holders, since their amounts are invested in different type of assets, it's our responsibility to disclose what type of assets are there and what zakah computes per unit of currency or per unit of investment. I will highly appreciate, brother, if you can additionally send your comments in writing as well, because your comments are very important, and I can understand you are coming after doing calculation and you understand the calculation very well. So if you can send your comments in writing with the differences identified, it will be helpful for the board. Although I can tell you that the decision of moving from shareholders to all stakeholders was a well-taken decision, thought after decision, but still the computation part will help us.
Okay.
Brother Omar, we
Do we have
another,
any other questions,
yes, there are others who are waiting in line to ask questions.
Please allow one by one.
Muhammad Jasim.
Yes, Assalamu alaikum.
Alaikum assalam.
Yeah, I have actually in Zakah fund clause number 15. Who's deciding to reinvest the Zakah fund? I believe it's the management, right, of the bank.
What we said 15, there should be a policy, because for example, you determine zakah at the beginning of the year and you distribute zakah over a period of time. There is no benefit. You are yourself a financial institution, you should know how to invest and get return on that. So decision will be done by the management, but in line with the policy approved by the Sharia Supervisory Board, because we don't want management to get it for their own advantage. So that's why we put it. So however, it's still better to clarify if where Zakah fund is invested by the management, it shall be in accordance with policy to be duly approved by the Sharia Board. So invested by the management. I think it's better to write invested by the management, or we can put a footnote, or we write by the management and provide explanation here.
Usually the management who's taking the decision to reinvest the Zakah fund. So I believe it's not responsible only for the Sharia Supervisory Board to approve the policy. I believe the Board of Directors should be involved here to take a decision, even to review the policy.
Okay, so we can say that the policy should be approved. Again, there is one issue, brother. To be honest, this paragraph, I remember when we had discussion, this is a governance paragraph. It's not an accounting paragraph. But we had put it here because we were afraid that people will be doing, injustice. So we need to say institutions, let's take the comment. Sister Farida, let's take a comment from Brother Jasmine. It's very important comment. We need to say that number one, who has to invest, number two, who has to approve. In addition to Sharia board, the board of directors should also approve the policy. So I think it's if we can add it to here, because it's a governance paragraph, but if the paragraph is there, it's better to clarify it further.
Yeah, this is only my
no, thank you very much. It's a very good comment, brother. It's a very good comment. So approval should be by both supervisory board and the board of directors, and or those charged with governance, as we say, or those charged with governance. And second is that investment decision by the management. That's okay. Any other comments?
From my side, that's all. Thank you very much.
Okay. Farida, do we have any other comments?
We have them raising their hands. Muhammad Jidda. There are others who are allowed to speak. Assalamu alaikum, Brother Muhammad Jidda.
Wa alaikum assalam wa rahmatullahi ta'ala wa barakatuh. Good morning, Mr. Umar Mustafa.
Good morning, brother. Welcome.
Yeah, thank you for the wonderful presentation. It seems to be one of the interactive presentations. My start question is that we here in Nigeria, we have institutions that are dedicated for collecting zakah. But due to the lack of system or standard of system, the zakat collection is not so sufficient. So how can we make banks to do that straight from their system to detect any customer that is nisab has reached to the limit of zakah, direct deducted from his account? Is it possible or not? Thank you so much.
Brother, as I mentioned earlier as well, I would love that all Islamic financial institutions must deduct zakah and must pay zakah from all parties where it is applicable. Like tax, they have to pay zakah and they have to deduct withholding taxes and whatever is there for everybody, so it should be there. But you know that in no country we can find an ideal Islamic system, and as AOIFI we are just doing right now the accounting standard. So from the accounting standard, we cannot put it as a mandatory requirement. So that is our unfortunate thing. But what we can do from the accounting standard is to ask for disclosures. This is the first step that we are doing. And this is La yukallifullaha nafsan illa wusaha. Allah does not make you responsible for anything that is not within your authority or within your possibility. So we are doing our part, and this is the first step towards our part. Hopefully on the governance side, we will also be developing a standard on management of zakah institutions. That might also be a good initiative towards that. We developed standards on Awqaf, Waqf governance, Waqf Sharia, Waqf Sharia standard, Waqf governance standard, Waqf accounting standard. So we are trying to do our level best to work not only for Islamic financial institutions, but also for the overall Islamic economic system, for the benefit of Ummah. We are trying our level best. You guys need to support us. So as of now, we can put in only disclosure requirements, and but we hope that once the disclosure requirements come in and when we are able to do some governance standard, we are hopeful that things can improve, inshallah.
Okay. I think the standard is not yet out, so you can share it with the all Islamic financial institutions in other countries.
Sorry, I couldn't hear the question very clearly, brother.
The standard you are working on the zakat. The standard you are working on the zakat. I think, is it yet out or is still a draft?
On the governance, we are just starting it. We have just formed the working group. It will take some time on the zakah institutions. But this exposure draft on accounting was issued some time back. But the zakah governance standard means that the management for zakah institutions, we have formed the working group, and we have the board, we have discussed the plan and the scope, prepared the scope of the standard. Inshallah, on the governance board, we will be developing that standard. Maybe it will take 6 months to 1 year to develop the first draft, then we will be holding public hearings. So it will take some time, but again, as I mentioned, we are trying to do our level best to support these initiatives, inshallah.
And the next thing is a very good idea. If I am suggesting, if you carry along all the Islamic institutions, for example, like the CBN, we have the Sharia Regulatory Board to undergo with you hand to hand to work on this. It will be a wonderful standard to be coming out for easement of collection of zakah.
Actually, I think this is as of now not the scope of AAOIFI, but we can try to use our like our presence in the market, and we can talk to people, but we cannot maybe do anything officially as AAOIFI. It might not be part of our scope.
Okay, thank you so much. Jazakallah khair.
Thank you, brother. Thank you. Any other comments?
There are a few on the chat, Brother Umar. Muhammad Tariq, if Brother Muhammad Tariq is online, we can request him to speak. Muhammad Tariq? Yes, he has raised his hand actually. Brother Muhammad Tariq.
Assalamu alaikum.
Wa alaikum assalam.
How are you, Sheikh Omar? How are things with you? Jazakallah khair for the very enlightening session, and you went through each.
Pleasure and welcome, brother.
Allah yabarik. Brother, this is about some of the financial statements which we've looked at when helping our clients compute zakat for them. They do in a normal way of presenting their financial statements also present line items such as the fair value through income statement and the fair value through the OCI and so on. Those are not directly referred to neither in the zakat
I got your point.
Standard here in the accounting standard.
It's better. We'll try to map with FAS 1. Now FAS 1 is being finalized. It's a good comment. Sister Farida, please note it down. I think this appendix B should be mapped with the disclosure requirements of FAS 1. Okay. Yes. So once we finalize this standard, it would be better, because this was illustrative, but still it is better that this illustrative is mapped with FAS 1. Actually, this standard draft was developed before FAS 1. Now FAS 1 first ED is issued. We are going to issue a revised exposure draft for FAS 1. So it's good if we can map it with FAS 1, inshallah. So there's some of the line items which are not appearing here because it's just an illustrative disclosure. It will be much better to disclose, inshallah. Thank you very much, brother. Good comment. Okay, do we have any other comment?
We have one comment, sorry, I can't pronounce his name, about provisions.
Yeah.
It says, can you give us more clarification about items included in provisions and constructive obligations, or some examples?
Very good point. What happens that according to Sharia, something is an established liability and not established liability. So for example, if I purchase goods from you and I need to pay you money for that, this is an established liability. So this is deductible from Zakah perspective. But for example, if I created a provision, now definition of provision from accounting perspective is that provision is a liability of is a legal or constructive obligation, is a legal or contractual or constructive obligation of uncertain timing and uncertain timing and amount. So it means that provision is where I create a liability being prudent. It's not an established contractual liability as of now, but I need to book it. For example, if I am into a ijara transaction where I know there will be an onerous commitment resulting in a loss situation, according to our FAS 30, I need to book a provision which is a liability for that amount, which is a loss to be incurred on completion of the transaction. The liability, this liability which is meeting the definition of accounting liability, does not meet the definition of Sharia liability. So it means that from the Sharia liability perspective, I cannot deduct this amount from the assets, because in this situation, I will pay less zakah as compared to the amount required by Sharia. So it can include any of the liabilities which are of uncertain timing and amount, and which are not established contractual obligations, which are not established liabilities, which are not against direct dealings, etc. So onerous commitments according to FAS 30 is one example, but there can be many more. Okay, now let's move to Appendix C. We can take more comments even after that. Appendix C is about illustrative disclosure of sources and uses of Zakah fund. So this was earlier a main primary statement in FAS 1, old FAS 1, but it was not separately for Zakah. It was for Zakah and charity combined. But now we considered that Zakah and charity should not be combined, and Zakah fund should be disclosed very clearly separately. So this is sources of Zakah fund and uses of Zakah fund. So sources include opening balance, zakah due from the institution, due from participating stakeholders, if any, voluntary zakah if there is any, then total zakah available for distribution, then uses of zakah fund, and then there is the ending, there is a zakah paid for poor and the needy, for the wayfarer and the heavily indebted. So what are the main causes and main areas? These are again illustrative. They can be according to the nature of activity of the zakah fund of the institution. So this will be used accordingly, and then undistributed zakah fund as at 31 December. So the closing balance will be there. Sister, this closing balance shall be bold.
Closing, yes, total uses. Okay.
I don't know whether it's not bold in the main body text or here only in the presentation. So just make sure it's bold. Any comments on Appendix C? Any comments on Appendix C?
I don't see any comments. Yeah. Mr. Fasam, I think, has a question.
Yes.
Yes, please, brother.
This administration and general expense, staff cost, in use of
okay,
Zakat
this
fund.
was based on one illustrative. This is based on one illustrative that was provided to us. I think we should remove it because it may create confusions. But in this situation, they have used Zakah fund. They had used Zakah fund to support some of the staff. So, but again, this was based on one of the specific illustratives that was provided to us. So I think it should be removed from here. Because again, according to the Sharia board ruling of your bank, you can use it for some situation like this, but it should not be a common practice. So I think we should be avoiding putting it here.
Okay.
Assalamu alaikum, brother.
Wa alaikum salam, brother.
I don't recognize that was open for me, so I would like to go back for Appendix B. Okay.
Yes, no problem.
Assets, for example, receivable, mudaraba. I was confused, not sure. Is this the general pool or that contributed just from the shareholders? I think here it's better to put disclose that will be, as you mentioned, that will be from the general pool. But
okay. Brother, if you allow me, there are two approaches. One is that we made it for like this on a total basis. Then we put a attribution here. Shareholders, like it's a continuation. If you see, it's a continuation of the same. So we took the total, then we found out how much I relate to a shareholder, how much to NCI, and how much to urea. So it can be columnar as well. So we will write down that this illustrative is based on this model, but it can be columnar as well. Is it okay? So we can provide an explanation here that this illustrative is based on total computation, then attribution. But if somebody want to do it on a columnar basis, they can do it. Is it good enough?
Maybe, yeah, okay. But I am doubtful. And now, as illustrated now, it will be the share, for example, receivable will be from the both sides, from shareholders or depositors. I am correct?
Right now, we computed the total figure. So right now, we have taken the total amount and we said that out of the total, this much to be paid by shareholder and this much to be paid by urea. But in that situation, we can put a comment here and we can say that this example provides it on a total basis and then attribution. And the second option is that instead of putting totals, you can put columns.
Okay. Okay, for Salam.
That might be better presentation for those who want to see each item separately. Actually, if you allow me, there is no benefit of saying how much receivable in this one and how much receivable in that one. But because it will be proportionate. As I mentioned, this will be according to individual pools. So sister, we need to put two comments here. One is that this is the total summarized presentation, so it needs to be computed for each subsidiary and each pool of assets. Number one, comment number one. Comment number two, any institution that wants to provide it on a columnar basis rather than total basis may do that, because these are just illustrative styles to do that. Okay.
Can we go for?
So, yes, brother, please.
According to Zakah Standard 35, the salam, there is two kind of salam. It is not all salam is for Zakah. So the one is for that it will be used for trade. So here, just we can add salam for trade, for trading.
Brother, salam at the time, salam is a receivable. Brother, salam is a receivable, so it will always be at par value, because whatever is appearing as salam in your books is salam receivable. But sister, again, we need to clarify it, as somebody else commented, that we should map it with FAS 1, but it should be mentioned as salam receivable and istasna receivable, or salam advance or istasna advance. Because it's a receivable will be at par value.
Yeah, this is the common, but in the Zakah 35 it was have differentiation. Also in istisna, there is some differentiation. If it is a mere receivable, it is correct. But also when it is in parallel, maybe istisna, when it is the istisna here, it is present the goods I will receive. Then there is differentiation between one for tradable or not tradable.
Okay, sister, first thing on here, we need to write salam receivable and istasna receivable. Brother, you are right. We don't have a different opinion. The only issue is this is developed from accounting perspective. So once the salam goods are received or istasna goods are received, they go to inventories. If you go to next caption, the concept of inventories is there, and then it applies the realizable value or the market value. So I think we are not having a difference with you. Your comment is correct, but we are not having a difference with you. We just have a style of presenting separately. So when we mention salam here, it is the receivable of salam. When we mention istasna here, it is advance or receivable of istasna here.
Okay.
But again, I agree with you, fully agree. That your comment is 100% valid. We might need to present it in a better style. So we need to write receivable here, and in inventories, we need to write whatever inventories related to Murabha, Istasna, Salam, etc. are there, they all will be included here.
Okay. Can we go in inventories? Here we use not realizable value.
Yes.
Not correct here. Because in 35 again, it is just mentioned for the market. So we can make it realizable value, it will be okay.
Your point is it should not be realizable, or it should be market.
It should be
Am
not
I right?
realizable value. It should be just realizable value without net. This is an inventory.
On the accounting, if what happens? Okay, let's highlight this one. Your comment, I have taken your comment. Let's highlight this one. Brother, what happens that at times for realizable does not complete without net for inventories particularly, because inventories realizable value may not include the cost to complete, cost to pack, cost to sell. So cost to complete and cost to sell is necessary for inventories to be able to sell them. So realizable value doesn't complete without net. But I think we should be, we will take your comment. We will reconsider this point.
Yeah, because in from what I understand, for the definition of net realizable value, for example, deduct any expenses for delivery or something like this, and it is not within the Sharia. Okay, and he mentioned for marketable security. Why we don't mention for the sukuk? security.
No, we will mention that. We'll mention that. No problem.
Have also to add after others or before that doubtful debts that collected in this year. This is also to be with Zakah.
Sorry, brother, your point I couldn't hear very clearly. My apologies.
If we have doubtful debts and we can collect it in this year, so it should be added as Zakah.
Right.
This is also mentioned.
Right. Okay, brother, just I'm taking you back to the for what inventory Sharia standard number 35 said. It says at selling market price. When you say selling market price is equal to net realizable value, I believe. But again, we'll just go through in detail for that.
Because in I read it in Arabic, maybe in translation there is differentiation.
No, we will do that, sir. Brother, thank you very much for very valuable comments. We will map them and we'll try to reconcile them. Just one such request, if you can send in writing as well, because our team is taking a note of all the points, but if you can send in writing, it will be very helpful, brother.
Okay, last thing is about payable and other liabilities. We here to be in line with all these liabilities, which is used for assets.
For assets required for subject to Zakah. Yeah, good point. We must write, Sister Farida, we must write it here. Liabilities only against assets which are subject to Zakah. Any liability which is not subject to Zakah will not be added. And payables during next financial period part also need to be noted, because we have difference on that. Sharia standard apparently says that, but we have a difference on that point. So it can be 12 months or it can be long-term liabilities as well, whatever the ruling is. So these two comments, please, on this page.
The last things in Appendix C, the Zakah for heavily in debt and freedom of slaves. I think now we have freedom of slaves. It's better to remove it.
Oh.
So, brother, we can mention here that these are just illustrative examples. Obviously, whatever according to the nature of the institution is, they can put it according to that. So whatever is in line with Sharia board's approvals and whatever is according to the nature of the institution's zakat fund utilization, it can be according to that.
Yeah, but no, I'm worried about from the globally when we still be speaking about freedom of slaves and we haven't until now. So maybe it is better to remove it. Okay,
brother, freedom of slaves, you know that in lot of Muslim countries in Asia and Africa, still people are working as slaves against indebts, and this is actually one of the situations where I have seen myself that some zakat institutions working on that part. But again, we can change it. This is not an issue. We can mention that it can be according to the classifications as per NAS or classification as per the activities, whatever they prefer.
Okay, thank you. That's all.
Thank you very much, brother, for very valuable comments. If you can just take 5 minutes to drop your points in bullet points, so just to make sure we don't miss out anything. Again, your points are very good. For all the points that we have received, I just want to assure that we will take them all to working group. Some of them I have answered as an explanation based on discussion and to clarify the things. But it does not mean that we will not take them forward. Whatever is relevant, we'll take it forward. Some of the things board may have already considered and they took a view and they may insist on their view. But a lot of items I believe that are there which we need to improve in our standard. So any other comments we have?
Brother Umar, we have people online who would like to speak.
Yes,
is Brother Dia? I'm sorry, I don't know how to...
Yes.
Assalamu alaikum.
Wa alaikum salam. I have one question about zakat. Is it due on illicit fund or prohibited income if all conditions are satisfied? Thank you.
My apologies, I couldn't understand your question very well. Can you kindly explain it to me? Because there was some connection issue as well. The sound was not very clear and the question was also not very clear to me. My apologies.
Is zakat due on illicit funds or in prohibited income? if all other conditions are satisfied. A condition about nisab, hawl, and obligation.
According to Sharia standard, prohibited income has to be given to charity without your ownership. It doesn't come into your ownership, so there is no zakah on that. It needs to be paid into charity directly. But whatever assets are haram assets, if they consist of receivable, there is zakah on that. So if you have an impermissible asset, like you have a conventional loan, so on the conventional loan, there will be no zakah on the interest receivable, rather total interest receivable will be payable into charity, while the asset will be subject to zakah and you still need to pay zakah on the asset. Any other question?
Thank you.
Next, please.
We have
Sister Farida, Sister Noor, we have another.
Yeah, we have, I think, Brother Jamilu Sani. I don't think he asked his question yet.
Assalamu alaikum.
Walaikum
Assalamu
assalam.
alaikum.
Walaikum assalam.
Thank you. Thank you, sir, for this nice presentation and exposure. This template, I was somehow confused. Was it on the Zakat administrators or the financial institutions that is collecting the Zakat on behalf of the administrators?
This standard applies on
auditor. And secondly, please.
Yeah, please.
A hypothetical example on how to arrive at this statement, maybe later. Sadly, banks, Islamic banks, are they liable to pay zakat as an entity or as an organization?
Okay, brother. So part one, standard is applicable on Islamic financial institutions. So statement in Appendix C is applicable on the zakat fund managed by the institution itself. So whatever zakah it is managing, this will be sources and uses be disclosed in this statement. So this statement is for IFIs, Islamic financial institutions, and it is applicable on their zakah fund management only. It is not applicable for any other zakah related institution. So that is part one. Part two, yeah. Any further issue in that? You want to add something? Okay, your second part of the question was not very clear to me, Sister Farida. Can you just can you just give him option to speak again for the second part of the question?
Yes, he's connected. We are
brother, can you repeat the second part, Brother Jamilu? Can you repeat the second part of the question only? Okay, next, please.
There are other participants online who would like to ask questions.
Yeah, please.
Assalamu alaikum.
Sister,
excuse me.
Have you taken all the questions in the in the Q&A?
Yes, I have taken them down.
Mr. Omar.
Yes, brother.
What about the treasury share?
Treasury shares? Brother, treasury shares do not form an asset. We believe that treasury share result in reduction of the equity. So when we said that this amount is applicable to shareholders, so it means that the shareholders' equity is calculated net of treasury shares.
Okay. Thank you.
My pleasure, brother.
I think there's a brother Mujid Ugusakin. Assalamu alaikum. Assalamu alaikum. They are allowed to speak. Brother Mujid?
Okay, then let's take others. I think there are some of them have mentioned in the Q&A list as well. Brother Hussam Ahmed, Brother Muhammad Abdul Latif Al Mahmoud.
Wa alaikum salam.
Assalamu alaikum. Who is this?
Naam, assalamu alaikum.
Majid, yeah, Brother Majid, we can hear you now. Brother Majid, can you hear me? We could hear you earlier. Okay, let's take from others. Brother Abdul Latif Al Muhammad Abdul Latif and Brother Hussam.
I asked my other question.
Brother Hussam, please.
Yes.
Yes. Welcome, brother.
Welcome. I'll finish question.
I think we allowed all the participants so far to ask the questions.
Yeah, please go ahead.
Brother Omar, I don't think there are any other questions by the panel.
Okay, so if there are no more questions, so then we can conclude now. And I would like to thank you all for being here. It was a great pleasure. It was a very nice interactive session, I believe. And I think a lot of good comments we received, which will help improving the standard. As I requested, those who have provided their comments, particularly some of them, I requested that they must submit it by writing as well, so that there is no confusion issues. But everything is recorded and noted, but just to make sure that nothing important is missed out. And those who actually have time later, and those who are practically in computing zakah for their institutions, it will be very helpful if they apply the draft standard and find out any implementation issues or anything and write it to them. We will be holding one more public hearing shortly in Arabic language, inshallah, for this standard. So with that, I would like to conclude and would like to thank you all. Alhamdulillah, it was a great pleasure being with you. Thank you for joining us, and thanks for your comments. Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum salam wa rahmatullah. Thank you, brother.
Family.
Thank you, brother.